Market psychology is key because it kind of gives us an impression of where we've been, where we are, but more importantly, where can we expect to go. All right, but before we do that, I have to get into exactly what those actual stop points along this pathway. All right, so if you guys can see here on the screen, we've got a disbelief. So on the bottom left here, we've got a disbelief that the rally will actually continue. All right, so that's kind of the beginning of the next bull cycle. And then along the way, you got a little bit of hope, right? So it says, hey, you know what? Maybe, just maybe, we're on the path to recovery. So kind of that disbelief, kind of goes 50-50. And then we're starting to go, hey, look, we're really optimistic. Hey, this rally is real. We're going some places, and the positive vibes get pushed quite a bit. And you start to feel that around you and those who are investing alongside you, or even if it's an online forum or wherever it is, things just start to ramp up, all right? Which then kind of lead into belief. You're like, okay, you know what? I know for sure this market is trending upwards. It's not going to fake me out, and I need to just push everything in. And that's usually when more and more retailers start to jump in. They're like, hey, look, I heard so-and-so is making this amount of money or has made this amount of gains in the last 7 days, 2 days, 3 days, whatever the case is. But it's a short-term period in which a significant amount of gain has been made, and so more people start to pile in. Now we're getting to the thrill aspect of it. They're like, look, I'm already all in. I need to borrow. And so when they say I will buy more on margin, that means I'm borrowing money I don't have so that I can put it into these positions or more positions so that I can make even more gains, exponential gains, but it's not on my dime. And at the moment that we're in with this, positive vibe and this hype that's building, you think it just continues forever, and so you don't have to worry about paying it back because you'll double, triple, 10x your money, and so paying it back is not even a concern at that point. And then you go on to think of it, look, I'm making this money. So like I said, in this belief stage, starting to say, look, I made money, I can start to put more in. The thrill is I start telling everybody, look, I am the next Warren Buffett, I'm the next Charlie Munger, I'm going to be the next CZ or BitBoy who have made tons of money in this market, and then I can leverage that to do other things. Okay, so that's kind of the thrill of it, and so people catch that from you. Like when you speak about something and you're fully positive, just as they do on the opposite side when you're negative, man, that vibe, you feed off of that. And so when you're like, hey, look, I'm in the markets, I am investing, people start to be like, maybe I should be in them. I mean, look what he's doing. I feel it. I feel that energy from that person, that thrill. And you get more and more people who want to jump in just because of the vibe that's surrounding them. Then we get to the top of the bull market, all right, which is the euphoria. This is like I said, part of the thrill is like, hey, you kind of start thinking. It's so funny because I've had this when I came in 2020 into the markets. I've experienced all of these. And so the thrill part, you're like, you know what? Maybe I'm good at this. Maybe this is my calling, right? You kind of start having those thoughts and like, okay, maybe I'm not quite Warren Buffett or Charlie Munger, but hey, man, I'm pretty damn good. But when you get to the euphoria section, not only do you think you're going to be rich, but you're thinking, man, what does Buffett know? What does Munger know? What is BitBoy? What is CZ? What are any of these guys that have made money in these markets, especially in the crypto market, right? Carl the Moon, MM Crypto. You're like, okay, yeah, I can do what they do, if not better. Because look at my portfolio. I'm smashing it. I'm up 150%. I'm up, 500%. Whatever it is, you're up big and you think this is not hard at all. Not a big deal. That's the euphoria part. It's right there at the top when you think the rest of the world is stupid and you are the sole genius to smash anyone that's ever come before you. That's the top. But then you trickle down, right? And then things kind of dip a little bit. So euphoria, that time period was around mid-November of 2021, right? Everyone was still thinking we're going to hit 100,000 Bitcoin by the end of the year. And we sat just under 70,000. That's where we were. And to be honest, things were looking like that was a slam dunk. That 100,000, maybe not 100,000, maybe 90, 95 was going to happen for sure. At least the 80,000s. But things kind of dipped out, right? And then you're like, okay, complacency. Like, look, we just need a breather, right? A lot of people talk about this breather. Like, things can't run forever, but what ends up happening is things will run, drop down a little bit, maybe trend sideways for a little while, and then go back up. There's always the part that it can go back down, but when you're in this part of the cycle, you don't consider the downward part of it. It's always the upward motion, all right? So we're in the complacency side. So look, we just need to cool it down. We're going to be pretty good. My portfolio still looks amazing. I'm good. But then things continue to trend downwards. And so we're in the anxiety level. Why am I getting these margin calls? And if you don't know what margin calls are, when you look at the thrill section over here, and I said that I will buy more on margin, got to tell everyone to buy, right? So over here in anxiety, well, let's get back over here. Margin calls means whatever you took out, now your position is down, and whoever you took that loan from essentially is calling for it back. That's what's happening. So now that anxiety is there, like, look, my portfolio was not where it was in the thrill section, and now I have to pay it back, and maybe my positions don't support paying it back easily. All right, so it's saying this dip is taking longer than expected. We're still thinking about it in terms of it being a dip, rather than now it's starting to correct and becoming a problem. So that mentality is still there. Look, it'll probably go up. We just dipped down, but things are getting anxious. I have to pay these loans back. Maybe I need to sell out some positions in order to do that. And it's not where it was, where I was crushing it with profits coming out of everywhere beforehand. So that happens, all right? We got that little cycle, that little phase done. And then we go into denial. Like, listen, you're telling yourself, my investments are with top quality assets. They'll come back. No problem. In this market, it'll be Bitcoin and ETH, right? Those are the two blue chips. And you're like, okay, I've seen it go down. Maybe you're at the beginning of the cycle. Let's say it was at, I got in at 9,000, right? So, okay, 9,000. I've seen it go from 9,000 to 70,000. Now we're dipped down. Maybe the denial section here is sitting at around, 35, 40,000. And you're like, yeah, but I've seen it hit 70. And I've seen, the progress that's been made over the last year or so, or 6 months to a year. And I know what I thought were quality 6 months ago has become even stronger now. And so you're like, okay, still full out denial. It can't go down any lower. I mean, we're now sitting here in the 30s, low 30s. Okay. But then you hit panic mode. And this is when everybody's selling. Like, I need to get out. I need to get out. And it's kind of like, okay, there are incidents that are not predicted, right? You could have the Luna crash, the Celsius, like all these FTX stuff can happen. But it's funny how things line up where, while things are not the same in terms of the events that are happening, the outcome is the same, right? So now we're in panic. Everyone's trying to get out. All right? And then you kind of fill into the capitulation stage, which is I'm getting 100% out of the markets. I can't afford to lose more. So maybe now you went from panic where maybe the profits went from 150,000 or 500,000 or 5,000x. Now they're down to your break even, right? Or maybe just a little bit above. And then you capitulate. You're like, look, it's break even. I'm hovering between break even, a little bit up, a little bit down. I just need to get out. I've seen where it was on the highs. I don't want to lose out even more. So you're gone, right? I just don't want any part of it. Or it's gone even lower, and now whatever you thought was going to bounce back to break even, you're like, forget it. It's not happening. I'm out. But then we get to the anger stage. And we start blaming other things, right? Like, hey, look, who's pushing this market down, right? I've done my work. I'm a savvy investor. I was supposed to be the next BitBoy, the next CZ, or Michael Saylor, or Charlie Munger, or Warren Buffett, whoever you kind of gravitate towards. So I know I'm great. So somebody must be crushing this market. Who's doing that, right? And when say shorting the market, who is banking on this market to sell off and is putting selling pressure on the market? And then we start talking about government and regulations, and man, like the government is out against us. Nobody cared about government regulations in the crypto market when Bitcoin was 70,000. No one talked about that regulation. But now we're, in the 16, 17,000 range, and everyone's talking about, well, what's going to happen with regulation? Is it a good thing? Is it a bad thing? We need it. We don't need it. Like, now it's an external issue that becomes more of a talking point. So that's the anger phase. And then we rolled over into the depression stage, which is, look, I lost everything. Whatever nest egg I had is completely gone. And how am I going to pay for all this new stuff that I have, right? And that new stuff could be like, look, you purchased more, you took out loans way when the market was hot, banking on your reserves to provide profits that you could pay them off easily. And now you don't, you still have the stuff, but now your savings are gone, or your, whatever nest egg you had that you wanted to exponentially grow to pay for things, that's been wiped out. So now you're just completely depressed, gone. But slowly, and you guys kind of match that to the first half or the beginning of this market, the disbelief. Now we've got a little bit of a different disbelief. So as we pass through the depression stage, we're trending upwards, but because we've been beaten down for so long, this disbelief is like, this is not going to happen. Like, whoever thinks that this is going to continue is a sucker, and I'm not going to get in, or I'm going to sit on the sidelines, or I held out longer than most, and I'm going to sell out here because it popped a little bit. That's kind of the disbelief section. All right. So we've gone through these phases, and I want to say what phase are we in right now. All right. And so during the bear market process, we inevitably hit the anger stage. That's when people call for more regulation of the market. And I talked about this. I said, look, when you're in the anger stage, you look for external forces. You start looking, and obviously the biggest external force for crypto is regulation and governments. So we start blaming and pointing the fingers and saying, okay, well, we don't have adoption, so people are going to sell out more, or this is the wild, wild west, so things aren't going to pan out. That's what we start pointing the fingers at. All right. And so that's where we are today, right now, when all the talk is about government this, regulation that. It's just a talking point because everybody's angry at seeing their portfolio go from what it was in mid-November of 2021 to where it is now. All right. And so then once we get through, this anger phase, still actually talks about, and I'll say this. So this anger phase now, where we are in, I want to put some perspective on that because it has to do with FTX, obviously, and the fallout that happened there. And oh my God, we need more government regulation because of FTX. And because of FTX and lack of regulation, that's why Bitcoin and ETH and the entire market are down and are going to go to zero. That's the narrative, right? But what does JP Morgan say here? Okay, so JP Morgan report went on to say that regulation will help onboard institutional investors to crypto because it is a key catalyst to drive a massive ramp in institutional adoption, further unlocking the utility of blockchain. As you can see, smart institutional money sees the FTX collapse as an opportunity for safer crypto adoption in the future, not the death knell for crypto that the doomsayers would have you believe. All right. So anyone out there right now who's been waiting for something negative to happen in crypto, or it's been a perma bear, meaning they're always down on the market or it's going to go down, that's their message that they send out. All they harp on is, look at FTX, that's an issue. Because of FTX, no institution's ever going to want to put money into the crypto space. That's a lie. I mean, I made a video about what institutions have done over the last several months in order to get their toes into this crypto water. So when JP Morgan comes out and said, no, actually, look, this issue here is actually a great catalyst for institution adoption going forward because it's going to drive regulation, which is then going to make it safer for institutions to jump in. It's actually a positive for institutional adoption. And then there's another report that the same analysts here actually put it even more bluntly. Okay, they said that while the news of the collapse of FTX is empowering to crypto skeptics, we would point out that all of the recent collapses in the crypto ecosystem have been from centralized players, and not from decentralized protocols. And in parentheses it said an emphasis was added. What does that mean? FTX, BlockFi, Celsius, Voyager, all of these entities were centralized. They were set up in the same traditional methods as every other company we've had prior to blockchain and crypto being in existence. Central entity, they control everything, information, accounts, do you have access to it? What happens with the profits? How do they generate revenues? Having a CEO, and that hierarchical structure, all of that is similar to what we have today. So if you look at Nike, if you look at other Apple, they're all built the same. You don't know what's happening behind the scenes. That's what FTX was. So while they were leveraging decentralized finance protocols, taking advantage of those protocols to make gains and do all kinds of things, they themselves were not a decentralized platform. And so them collapsing, them doing all of this fraud and calling all this issue was actually a highlight for why we need decentralized finance, smart contracts that execute when parameters are met. There are no individuals that have their motives tied to it. Human error is not a part of it. All this kind of stuff. This FTX situation actually highlights the need for decentralized finance, and that's what the JP Morgan analysts are saying. And so once we pass the anger stage, which is where we are today, all right, that's everything that we've talked about as being angry. We're all talking about, listen, it's Sam Bankman-Fried's fault. It is the lack of government regulation that allowed Sam Bankman-Fried to do what he did. And so how dare he? Who else is shorting the market? Kevin O'Leary. All this anger is, I'm not saying it's not true. It's definitely true. But we have all this anger built up, and that's the phase that we're in right now. But what happens then when we go to the depression stage, right? About this my retirement money, and that's the final leg of this, downward movement here. All right. So this last emotional stage of the bear market is depression, and this final stage can drag on for a few months. Now, just so before I go on, these are actually excerpts from Teeka Tiwari and his newsletter, and I love everything that he presents in there. And so I want to share that with you guys because it has some really quality information, all right? And he says, we're not there yet, though. During this phase, you'll feel like crypto will never, ever come back. You'll lament ever getting into the asset, and all you see ahead is an endless expanse of darkness. That's pretty much a great summary of how everyone feels today. Why did I get in here? What a waste of time. What a waste of capital. And things are only going to get worse, never going to get better. That's the narrative that's going on right now. All right. And it goes, that's what market cycle depression looks like. You'll beat yourself up for buying crypto and question your own sanity. You'll think this will be the final wipeout. And that's what everyone is saying right now, right? We just need one more event and, the entire house folds. Everything goes to zero. Everyone loses all their capital, and it will never rise from the ashes again. That is the mentality right now. And he goes on to say, this is exactly how I felt in March 2020 when Bitcoin dropped 50% overnight. Overnight. That's crazy. Right now, if you look at it, we're sitting at around over 70%, high 70% of where we are from the all-time highs. And to imagine 50% overnight, that's mass panic. So they talk of the long dark night of the soul. I did some deep soul searching that day in March, and I don't question that one bit. What I like what he says here is that he says, fortunately for my subscribers, I've learned to divorce my actions from my emotions. You see, it's not that I don't feel emotions. I do. I feel them deeply. It's that I've learned how to separate my actions from my feelings. I cannot stress how important that is. With anything in life, but especially when you're investing. Investing has less to do with technical expertise, technical skills, and more about psychology and emotional stability while trading or investing, period. Everyone wants to get in when things are hot. Everyone wants to get out when things are at the bottom. That's actually the opposite of what you should be doing. But our emotions don't allow us to do that. And so if you can keep those under control, just like what they say with anything in life, right? If you're highly emotional, someone else or something else will always get the better of you. And that's the same thing when it goes to investing. If you are emotional and you're pulling the metaphorical trigger on certain things, that's going to be problematic for you across the board. And so you want to make sure that while you still feel those things, anger, depression, oh my God, we're going to get wiped out, you got to separate that from what you actually do. Because the only time that you will have realized losses is when you sell out. Now, this assumes that you've done your work, you feel comfortable and have conviction in what you have purchased. And that's the assumption there, right? There are definitely certain times you want to get out of your positions when you try to make a short-term gain, or you're doing something that you don't really feel comfortable with, but you just tried it. If you want to get out of those, fine. But if you feel comfortable, in this case Bitcoin and ETH, and they're in for the long haul, then you have to separate your emotions from what you actually do. And so then, what's the next point? The next point is the disbelief section. And this is like, hey, this is a sucker's rally. Anyone who thinks this is going to continue to go up, they are going to get their feelings hurt, right? Their gains are going to be wiped out, and I don't trust it's going to happen, so I'm either going to sit on the sidelines or I'm going to sell out quickly now, even though I may not even be at break even, but I've been in this downward movement for so long, seeing so many losses that continue to gain over time, that I'll take even a little bump up and I'm out. And over here, on this right-hand side here is Bitcoin's disbelief rally. So this is 2019, right? So things were pretty bad. There's that depression state that was going on. And then right here, April 2019, Bitcoin jumped 24% in a single day after months of the price moving sideways. So imagine, December 18, things drop. Now you're going from December, mid-December, all the way to April. Things are trending sideways. No hope. Nobody has any hope about something in the future being positive for Bitcoin. And now we've got a 24% spike. No one's going to believe that, right? You're just like, no, this is going to drop just like everything else. But what does it do? Then it sets May kind of trend sideways for a little bit, right? April to May. Trend sideways for a bit. And then shoots up again. And BTC uptrend continues, and we emerge from the crypto winter. Now, with the black swan that happened in 2020, again, things dipped 50% overnight. But after that, things skyrocketed. Okay, so it's still part of this, even though it was a little break from the cycle. But these disbelief rallies are common, right? It's all psychology. It's all emotional. If you've been hurt for so long, you're not going to think that anything positive is sustainable. But here's the final takeaway that I do want to share with everybody here. I want to get out of this. One sec. All right. This is what I want to share, okay? Is that the next bull market champions will be made in this bear market. The next bull market champions will be made in this bear market. What do I mean by that? The building that's going on now, when things are quiet, when no one wants to invest, everyone is scared, everyone is saying to get out before you lose everything if you already have it. This is the time when we invest, because 2024, 2025, maybe tail end of 2023, when the market starts to turn, when we get past that disbelief rally and go into the next upward cycle, those who are building now, those who have sustained themselves throughout this horrible time period, well, they've been stress tested. They've been battle tested. They have the scars, and they're still standing. Those are the ones that are going to continue to go forward. Bitcoin definitely has been through many of them right from the beginning, obviously, and still continues to stand. That's my all-time favorite. ETH is right there with it, several years behind, but more of a 1A, 1B selection. And those two have stood the test of time. So how is it going to be in the next rally? Will it fly off and go even higher than the 70,000? I think so. Or the 5,000 that ETH hit? I think so. And then if you can find projects that are in this space, that are building, that have a strong team, have a strong business model, they've got some traction, they know how they're going to go to market, they have some capital behind them, you can ride these guys, and while they're building now and being a smart business and running with great operations, and then when the next bull market hit, they take off and you enjoy the ride. All right, so while we are in the anger phase, and we'll see how long this plays out before this depression stage hits. So here's a sad takeaway from this, right? This is what Tika was saying as well, is that there's probably more bottom to go. I don't think there's that much bottom to go. You know, we're sitting at 16, 17. Can it hit 13? Can it dip down real quick and come right back up at 12 or 10? Maybe. I don't see that as being likely. I think we are where we are. We trend from high 15s to where we are 17s as the lows. But I'm not worried about it because I picked my blue chips, my Bitcoin, my ETH. And I'm ready. I'm in it for the long haul, right? So I'm going to pass through this anger phase. I'll pass through the depression stage. I will continue to add during the disbelief stage like I have in every stage. And I'm here for the long haul, so those don't bother me. All right, so while we may be in the anger phase overall, where you stand individually is going to dictate how you invest going forward. And only you can decide how you're going to do that.